In the meantime, let me also bring in Varun Goel, who's joining us as well on Countdown today. Varun, you just heard the news as well, restructuring plans there when it comes to SR shipping. Have you been tracking that counter lately?
Good afternoon, Abba. I think as far as the whole shipping industry is concerned, I think there is a need to be very cautious on the space at this point of time. I think the whole seaborne trade is a function of how the demand comes out of China. In fact, there are no new signs coming out that the Chinese economy is slowing down every second day, and we would expect the GDP growth and therefore the demand for commodities and manufacturing growth in China to come down, and therefore we would think that all companies which are in the business of transporting raw materials to and fro China would definitely get impacted. Therefore, we would keep an underweight position on the shipping space as a whole at this point of time.
Okay, as we speak, the market is now falling a little more decisively, 41 points lower on the Nifty. That's a cut of nearly 0.8% that has come through. So gradual slide, but it's quite evident now on the screen. It's a very diversified set of stocks that's actually leading the market down. Sectorally, metals, real estate, quite weak, no doubt about that. IT has not really been doing much. Wipro is down about 2.5%. Stocks like ICICI Bank and Bharti, which have a significant weight on the index, they're adding to the pressure. And let's do a quick check on Reliance, because that was a one big strong hand that was holding up this market, and now it has turned negative. It's down about 0.5%. So that explains pretty much the last minute slide or the last half-hour slide that we're witnessing on the screen right now. Varun, what's the call on the market? Do you think we've seen the top of this rally?
Well, so if you look at the valuations at this point of time, the market is trading close to 17, 18 times FY11 earnings and close to 15 times FY12 earnings. I think the earnings as a whole have tend to disappointed. We were looking at 25% earnings growth before the beginning of this result season. As of now, the earning growth estimate has come down to 20%. I think we will need to see the kind of numbers that come in the next few quarters, and that's so, because that would enable us to have a better sense of how FY12 numbers should come. I think overall, from the large cap stocks perspective, most of the stocks seem to be trading at almost full valuations, although we still see pockets of value in the mid cap space. So overall, as for the market as a whole, we would not expect a major upside in the short term, although we would expect the markets to be around 20,000 by March 11.
All right, let's turn your attention to Bharti. Numbers out today. They've also made a small acquisition in Seychelles. They're planning to pump in a lot more into boosting the business this year. But all in all, the numbers looking good. The counter, of course, hasn't had too much of a reaction. It's trading at 320 right now. Is Bharti looking to you?
I think telecom space as a whole will continue to be under a lot of pressure, because of the kind of competitive intensity that we are seeing. If we look at the numbers closely in Bharti's case also, the average revenue per user is coming down. I think that another 5 rupees have come down and moved to 215. I think the average realization per minute is also on its way down, and I think we still have some way to go before we see some kind of stabilization on those numbers. I think all the new players, with the players which came in the last 1 year, they are battling a tough battle. It's a battle for survival, and they'll do whatever they can to stay afloat, which would mean even fierce competition in the next 2 to 4 quarters. I think some sense of stability will come only 4 to 6 quarters down the line, when there should be consolidation in the industry. Also for the Bharti, I think the acquisition that they made in Africa will take its time to become earnings accretive. I think at least in the next 2 to 3 quarters, we are going to see some pain. There's going to be some amount of structuring that is required to make those operations profitable. So I think for the next 3 to 6 quarters, we would tend to stay away from the telecom space as a whole.
Okay, so stay away from telecom is really what Varun is saying. Let's also get in a perspective from Bhavesh Gandhi of IIF to lose momentum towards the end of trade. Bharti also, despite that slight up move in the middle of the day, did see a bit of a blip later on in trade. So all in all, it's not looking all that great a picture. Remember, we have been seeing constant weakness so far this week. Bharti is also going to close down about 1.5% or so. Most of the losses, however, are also coming from the realty space, realty and banking, two areas where we're not seeing, of course, a very good movement coming in. And FMCG also, a lot of brokerage downgrades also coming in on the FMCG pack, and that's the other area where we are seeing declines. In fact, Varun, while we have you, let me get a quick comment from you on the FMCG pack before we actually shut shop. But it's like HSBC putting, of course, the downgrades on that sector as well.
I think as far as the FMCG space is concerned, the valuations have clearly run ahead of the fundamentals. I think most of the larger cap companies are currently trading at almost 25 to 30 times FY12 earnings. I don't really see a lot of upside from these levels from a fundamental macroeconomic perspective. Yes, there is a lot of discretionary spending that is going on, and probably with the recent cooling off of commodity prices, there could be some benefit on the margins for most of these companies. But I think the prices are fully discounting those upsides in earnings. So we would stay away from the space at this point of time.
Okay, stay away. Nomura also turning negative on valuations, advises profit booking, saying the sector may underperform. Top sells Hindustan Unilever. Markets have shot as we speak. Sensex down 174 points on first glance, a full percent. Nifty also pretty much near that mark, 54.12 as we speak. HUL closed marginally in the green today, but Bharti, one of the big losers, down about 1.5% on the day that its numbers have come out, despite a decent set of numbers, keeping into account, of course, Zen, of course, also being part of the books this time around. FMCG did see quite a bit of a slump today. Autopac also, despite Tata Motors looking good, up for a second day post its numbers, but stocks like M&M really sort of dragging down that auto space. Power, banking, some of the other sectors, there you go. M&M was down about 2% in trade today, so that particular counter also not looking so good. Remember that in the news also for the bid for SsangYong, and that bid might go up to about $400 million or so for M&M. We'll get further clarity on that over the next couple of days. So the auto index has closed flat as we speak. IT also down, healthcare also. So all in all, of course, market breadth, most of the sectoral indices seeing selling today as well. Some amount of profit booking also coming in. Stocks like ICICI Bank seeing a lot of weakness today. Infosys, Wipro, a lot of the IT heavyweights, of course, sentiment weighing on them as well. Protectionist measures coming in from the US, rhetoric from President Obama, all of that adding to some of the pressure on the IT pack. TCS was also down about 0.7% in trade. Suzlon, another loser when it comes to the heavyweights. That counter was also looking weak today. So that gives you a sense of the action when it comes to closing. A few gainers, of course, as we mentioned. Tata Motors did see another good day of trade. BPCL also one of the small sort of areas, small pockets of activity as we saw. It was up 2.3% on closing, closed at about 661 in trade. Mid caps and small caps didn't participate either in the rally in trade today, so we didn't actually see any kind of relief when it came to some of the counters in that space. They also did see some amount of selling coming in there. Varun, let me go back across you. Let me ask you on Mahindra & Mahindra first, actually. Some amount of pressure coming in on that counter. It might be looking to bid for SsangYong as well. How are you looking at M&M right now?
I think as far as the whole space is concerned, continue quite positive on commercial vehicle segment and segment. I think with the kind of recovery that we are seeing in the economy at this point of time, we have a robust IIP growth that should definitely get reflected in increased traffic, of increased movement of goods and services across the country. And I think the robust sales number that we have seen in the first 6 months of this calendar year would continue in the months going forward. And we still see another 10 to 15% upside in most of the large cap auto stocks. So we would continue to be positive on this space.
All right, Varun, what's the strategy you'd recommend? Markets have shut now. Going ahead, we've been seeing fairly range-bound trade, and we've been hovering, of course, near that, trying to reach perhaps at 500 on the Nifty and trying to stay above 18,000 when it comes to the Sensex. Nifty today back towards the 5,400 mark. But where do you really see us headed from here?
Well, I think it's very difficult to take a call on the markets in the shorter term. As I said, we're still looking at around 10% upside by March FY11. I think the shorter term, the cues to watch out are, of course, what's happening globally. I think yesterday's statement by US Fed definitely talks about a slowing of US economy. So I think a few months down the line, we are definitely going to see a fresh round of concerns in US, and of course, Europe is still not out of trouble. I think from an Indian perspective, tomorrow we have the big number, which is the IIP number, and then next week we have the inflation numbers. So these are some of the macroeconomic data which could impact the directions of the market in the short term.
Well, and thanks so much for joining us today, and we'll try and see really what happens tomorrow. But for now, we take your leave. Coming up next, of course, is Bulls and Bears. Before we go on, to also remind you to tune into Financial Planner later on this evening at about 5:30.